Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Wednesday, January 17th, 5:24 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we're in an uptrend. You can see on the trend gauge over here, market leadership still showing a green arrow. Leaders were mixed today, however. Short term, taking a look at the five major indexes. Multiple closes for mid caps and small caps below the 21-day moving average has the yellow sub arrow out, but an undercut and reclaim on the S&P 500 and the Nasdaq 100 against the 21-day moving average keeps that arrow on green. Then taking a look at all five of the major indexes against our medium-term 50-day moving average and long-term 200-day moving average, still green on those time frames. So what happened today? Pretty unhealthy gap down for the second straight day, and this one followed through with more selling in early afternoon. Decent close off the lows, however, and a lot of hammer candles. A hammer is, well, just picture a hammer. It implies that you made lows and finished well off the lows and finished near the top of the range. Seeing a lot of that in leading stocks as well as the indexes. So often this can signal a bottom, especially with this being arguably the third day down. Last Friday was kind of a mixed day. Somewhat of a reason to be optimistic with the action and money flowing into the strongest of the leaders. They say the strength is revealed in the pullback, and it certainly was today for a handful of stocks. Others not so much. We'll review those charts. Here are the numbers. The Big 7 down 7/10, RG8 down 8/10, S&P 500 down 0.56, equal weighted S&P 500 down 8/10, NASDAQ 100 down 0.56, about the same as the equal weighted down 0.6, Dow down 0.25%, mid caps and small caps down 0.7%. Global diversified 60/40 stock and bond down 0.58%. In-house GROTECTION, we took a hit on some of our leaders, got stopped early or late morning. Some of them rebounded, some of them did not. Down on the day 1.35%. Let's take a look at the charts and then the tail of the tape. We'll start with the S&P 500. You can see here the undercut and reclaim of the green line. Now, all of these arrows that I have pasted on here are inflection points, meaning it was a significant day and you either reference the high or the low of that day when managing positions or expectations. And the most recent one was a week ago on Monday. The prior 2 days, we tested the 21-day moving average, held, and then we had a strong buying trend up day. That would have been Monday the 8th, and followed through to the upside over the next 3 to 4 sessions before topping right below 4,800. And now 2 days down. The prior 2 days down off of that 4,800, so arguably a third day down. But you can see again the undercut and reclaim of that 47, 28, 21-day moving average. There's also a key support resistance level right around 47.30 there. So below today's low is pretty critical. That'll be a clear break of the 21-day moving average, which is almost flattened now. So it's time for the bulls to stop the pullback and reinvigorate to the upside. Let's put it that way. Here's the NASDAQ 100, also undercut and reclaim of the 21-day moving average. Looks like just a normal pullback here. In fact, the XLK, the tech portion of the S&P 500, is the strongest of the 11 spider sectors. So despite some techs taking hits, others are holding up just fine. Let's go to the Dow Jones Industrial Average, which showed some relative strength today, closing basically right on the 21-day moving average. Mid caps and small caps weak most of the day. Second close below the 21 on small caps, although well off the lows. And IWM fourth close below the 21-day, bouncing right near the 50-day moving average and closing near the top of the range. So this is the second candle in a 3-candle morning star candle combo. If we get halfway into the prior day's range, that would signify the 3 candle pattern if we close up in there, and that's a bottoming formation. So that's something we'll be looking for. The VIX was strong today, second day above the 21 and 50-day moving averages, still below the 15 level, and reversed at the downtrending 200-day moving average. The dollar started out definitely not helping, but came off as the day went along. Gold, GLD down 1.1%. GDX gold stocks, these are looking terrible, down 3.1%. Bitcoin continuing to hold the bottom of this range that it's been in for about 6 weeks now, right above the 50-day moving average. Bonds broadly lower, meaning interest rates up slightly today. Again, really, this looks like the same formation the last 2 days as the indexes. So the broad BND down 0.23%, the long bond down 0.16%, price bouncing at the 50-day moving average. TYX, the 30-year, being rejected at the downtrending 50-day moving average, and the 10-year TNX up about 1%. Here's the tail of the tape. That's our inter-asset correlation. You can pause this. I'll hit the highlights. Fear and greed came off 12 points today, down to 58. So that is a sign of some weakness, overall weakness from a sentiment standpoint coming into the market. For the open, December retail sales were up 0.6%, well above the 0.4 expectation, and that hit the indexes pre-market as strength in the economy leads to thinking the Fed's not going to cut. The market has kind of been pricing in, actually pricing in 6 rate cuts, although the Fed is saying only 3. Not sure what the reason for the discrepancy is, but if prices are being bid based on 6 rate cuts and you're not getting them, that may be part of the reason for the pullback. I also read a story about some declining estimates by analysts on S&P 500 names. So second day down, solidly second day down. First close below the 8 EMA. 8th day above the 21-day with an undercut and reclaim. So sectors, not a lot of good today, but showing relative strength. Aerospace and defense, financials, staples, and healthcare. Although 11 out of 11 sectors were down, these were down the least. On the downside, cloud stocks, utilities, and real estate down the most. So in-house, trim some names. FNGU, this is big cap tech. Basically our stop was triggered on that. We got back to break even on it. SMCI took a loss on that, even though it undercut and reclaimed the 21-day by the end of the day, and back to break even on nail, so we closed that. URTY, this is the small cap index ETF. We trimmed a little bit of that on the early weakness. It recovered after that. And isolating strength, Datadog stood out today, making new recent highs. We took a starter position in that. Net, that dropped our exposure down from 1.88 to 1.51. And the bottom line, second straight gap down, however, closing off the lows. Leaders were mixed today. So let's talk about some of those leaders and some that didn't do so well. Start with the portfolio. Crowd has been an extremely strong stock lately. Gave some of that back today, although all it did is undercut and reclaim the 8-day exponential moving average. And you know, I've said it, if your stock is above the 8-day exponential moving average, you really can't complain. But again, it makes the lows of today a critical level. Something that we own that did stand out today and continues to be a big leader in the market, even after a strong up day yesterday, follow through again today by AMD, crawling well off the lows, closing near the highs, up 0.9%. Look at the volume patterns on this. This is very clearly something that institutions are wanting to get into. Normal pullback for NVIDIA. When a leading stock with a high beta versus the S&P is down in line with the S&P, it's a victory for that stock. You can see undercut yesterday's lows, but closed near the top of the range on the day. Lilly gave back a little bit. sitting right on the 8-day exponential moving average. Uber gave up a little bit, but again, closing, bouncing off the 8 and closing high in its range. The position that we took today, Datadog, you can see the strength there, down to the 120 level. And then let's look at a short-term chart here. Buyers coming in shortly after the open on this and then forming a cup into the close with a strong close. So Datadog back in the portfolio. Some other stocks that were extremely strong today. First, let's look at SMCI, which we got stopped out on. Um, Buying it up here, it was slightly extended near the top of the range. We expected a handle. Didn't really expect the harsh 2 days down, but this does have a wide ATR, and got out over our skis a little bit with this. By the end of the day, bouncing off the 21-day moving average, but we did take the 0.2% loss to overall AUM, which is kind of our limit. So in addition to Datadog, some things that were strong, Nutanix jumped out. It got an upgrade, it gapped up, came back near flat, but followed through to the upside. The volume pattern's very positive in this one too. We are not in this stock, but up 5% on over double average volume is a good sign. GoDaddy also a nice day, bouncing off the 21-day moving average on above average volume. Let's see what else had a good day today. Abercrombie and Fitch, which has been a leader, hanging out near that 100 level. Didn't look like it was under any stress at all today. And Deckers trying to break above this 723 high over here. It did close above it after bouncing off the 50-day moving average. So some strong names today. As I mentioned, CrowdStrike on the downside, and not a whole lot of other names that stood out as true laggards that I was still interested in. Some of the ones that have come off the list, that come off of our list of attractive names, continue to struggle down near the 50-day moving average and or under the 21-day moving average. But all in all, despite the mixed leader day, the close was a win for the bulls, and now we'll take a look at what comes out for the rest of this week. We need the lows today to hold on the S&P 500 and the Nasdaq 100, and small caps to come off, continue to come off the 50-day moving average. That's going to wrap it. As always, like to hear from you. The email's don@revereasset.com. On YouTube, like and subscribe, please, and tell your friends. That it helps the algorithms, helps pick up our content and get it in other people's streams that are looking for the things that you are looking for. Or you can email my partner, Dan Stewart, if you're interested in becoming a client, or call 855-REAL-WEALTH. That's 855-732-5932. So stopped on a few things the last couple of days during the pullback, but holding so far, looking like a normal pullback. But again, the lows of the inflection point and the lows of today, along with that 21-day moving average, are two levels that we're paying a lot of attention to, as they definitely need to hold. And with that, I'll wrap up the video for Wednesday, January 17th. This is Don Vandenbord with Revere Asset Management. Checking under the hood, telling it like it is. Thanks for listening, and have a great day.